Now, Italy's ruling coalition has reached a last-minute agreement on the country's budget. The plan delivers on costly election promises, but risks a confrontation with Brussels over EU fiscal rules. Well, officials in Brussels now have a week to make an initial assessment of the draft. We're now joined by Bloomberg Economics senior Euro area economist. He's David Powell. David, thank you so much for coming on Bloomberg Surveillance. Will this be confrontational for Brussels?
Sorry, could you repeat that, Francine?
I was asking you whether this Italian budget is confrontational in regards to Brussels and the EU rules.
Right, it certainly is confrontational because they've drastically changed the figures that had been put in place by the previous government. The real issue here is the widening of the structural deficit. So previously, that structural deficit was going to go to 0.4% from 0.9% next year, and that would have put it in line with the under 0.5% that Brussels requires, but they've actually widened it now up to about 1.7%, and that's really what the confrontation is over here, that structural deficit having widened and Rome essentially just completely flouting the rules from Brussels.
What does that mean, David, in terms of structural reform? Are these handouts, or will these actually contribute to Italian growth?
Well, it certainly will contribute to Italian growth. So there's going to be a fiscal impulse here. There's going to be a fiscal loosening, and that's why the GDP forecast was revised up to about 1.5% for next year. So it's certainly going to provide a temporary boost to growth, and that will be felt in the labor market, a few more jobs available, et cetera.
Do you know what happens to the deficit next year? I guess the concern from Brussels is that actually they won't cut the deficit in 2019, 2020.
Yeah, I mean, looking further out, the projections that they've submitted show some improvement, but still, it's not the kind of improvement that Brussels was looking for. When you run all these numbers, the debt to GDP ratio just marginally comes down, and not very much, and that essentially leaves Italy vulnerable with this huge stock of debt to any unforeseen crises, the next recession, a banking crisis. We know, for example, that Italy never really cleaned up its banks from the last crisis. So it would like to have some fiscal space, and we don't really see that. For many of these numbers, there's no improvement being made.
David, what's the calendar look like through October, into November, into the end of the year? What are you and your team watching for in Italy?
Well, the main thing we're watching for right now is the reaction of the European Union to the submission of this budget. Like we said, it was just submitted, and in 1 week's time, we should get an initial assessment, and that's what is going to be that's what's going to be the focus coming up. How does the EU react? We kind of know how they're going to react already because we've heard some comments, but how that plays out over the course of the next month in terms of the compromise that's finally reached.
Well, the compromise, who holds the power here? In every discussion, there's power. Who's the power player? Is it Italy saying to Europe, no, this is the way we're going to do it? Do they do a almost Trump lateral kind of thing? Or does someone in Europe really have the power to say to Italy, this is the way it's going to be?
Well, certainly Italy is not Greece in the sense it's a much larger economy. It's the euro area's third largest economy, and it probably can't be pushed around by Brussels the same way a much smaller country can be. At the same time, they have made these agreements. The EU does have very drastic measures it could take if a country were to completely ignore the budget rules. It can impose fines, but like I said, those are quite drastic. They're not normally used, and it's highly unlikely at this stage that Italy's going to be fined, and more likely there will be some kind of compromise. But the government here certainly does have a considerable amount of power. It's democratically elected, and after all, at the end of the day, it controls the Italian treasury, which will make these decisions.
David, how worried are you, as our chief European economist, how worried are you about European growth and the fact that actually politics, be it in Italy, but also what we're seeing in Germany, may impact future structural reform?
I mean, looking beyond Italy, the growth outlook for Europe has certainly deteriorated a bit, but that was always to be expected. We're never going to have the large growth rates we saw last year repeated because essentially the euro area economy is healing. It's healed from the crisis, and growth is going to be closer to trend moving forward. And that's what we're experiencing now. But in addition to that, there are also some risks to growth coming from the emerging trade wars, from the troubles in emerging markets. And of course, the ECB is watching all of that. None of that so far has been serious enough to derail them from ending quantitative easing, but all very much in focus.